Welcome to Phillip Futures Market Watch. My name is Wee Hong. I'm the FX dealer for the Forex dealing desk in Phillip Futures. This week, I'll do a quick analysis of the monetary policy decisions announced by the European Central Bank or ECB on 4th September 2014, and we'll discuss the outlook for euro currency. The ECB decided to take further policy measures against a backdrop of weakening growth momentum and sliding inflation expectations. Interest rates were cut by 10 basis points across the three main categories. Main refinancing rate was cut from 0.15% to 0.05%. Marginal lending facility was reduced from 0.40% to 0.30%. And lastly, deposit facility was further lowered into the negative territory from negative 0.1% to negative 0.2%. This is the second rate cut in 3 months since the 10 basis points cut in June 2014. As we can see from the chart, ECB main refinancing rate is now at all-time low. Market analysts had expected the rate to remain unchanged. As a result, market was largely surprised by the ECB decision. Following the announcement, the euro-dollar fell 1.61% or almost 200 pips, reaching a low of 1.2920. This is a 14-month low since 9 July 2013. Let's take a look at some of the reasons for the rate cuts as cited by Draghi. During the ECB press conference, ECB President Draghi has tried to justify the reasons for the rate cuts. 1. The main reason is to ensure there is no more confusion about whether ECB has reached the lower bound of the refinancing rate. 2. Economic data in August on the GDP and inflation showed that the growth recovery was losing momentum. 3. The decision to lower rate, coupled with the other measures in place, has been taken to underpin the firm anchoring of medium to long-term inflation expectations below or close to 2%. Following the recent ECB announcement, these are my key takeaways. 1. The main reason for rate cut was to reinforce interest rates are now at the lower bound. This signals that there will be no more further rate cuts. Number 2. ECB will do whatever it takes to stimulate its economy as they implement a new series of measures to tackle concerns about its economic outlook and raise inflation. 3. It actually sends a very strong message to the market via a two-step approach. 0.1% rate cut. On top of that, we have a pre-announcement of asset-based securities purchases, with more details coming in October 2014. Draghi has implicitly indicated he wants to grow ECB's balance sheet by up to Euro 1 trillion via the asset purchase programs. So, we can actually expect a huge ABS program in October. This is likely to add substantial liquidity to the market, increasing further downward pressure on euro currency. To me, this is as good as partial PE, less the government bonds purchase. The fifth point, geopolitical risks between Russia and Ukraine, and also structural reforms across Eurozone are likely to continue to add downward risk to European economies. Number 6. European and US monetary policies are now on a diverging path. Hence, euro currency will continue to weaken even further as the Fed moves closer to raise its interest rates in the near future. 7. The rate cuts are likely to encourage a higher participation rate at the upcoming TLRO or Targeted Long-Term Refinancing Operations program. Finally, after all these measures are announced at the meeting, it becomes obvious to me that the next option for the ECB will be a full-scale QE. That is to include government bonds purchase as well. However, this is only likely to occur if the macro outlook continues to worsen and or inflation expectations continue to decrease again. Now let us take a look at the short-term outlook for Euro. Draghi has released a massive amount of stimulus. As such, my inclination is to look to trade the Euro dollar from the short side, given that there is still a month before the full release of the ABS details. The size and the scope of the program is likely to reflect the ECB's resolve, and in turn it will affect the Euro dollar. The downside looks open for a test of the double bottom from April and June 2013 at around 12750. As you can see from the chart, for me, we can look to sell on retracement to the level 1.3005 to 15. This is the 38% retracement level, or we can also look to sell around 1.3060 to 70, which is the 61.8% retracement level. For myself, but the personal target will be to buy back at 1.2750. We have come to the end of this week's edition of Market Watch, where we have discussed the ECB policy decisions and also the outlook for Euro currency. For more information on the risks and returns of investing in Phillip Futures, please approach any representative from Phillip Futures for a further discussion. With that, I've come to the end of the presentation. Please subscribe to us on PhillipCapital YouTube channel and also Facebook. Stay tuned for more Market Watch videos. Thank you.